The price of Bitcoin has been on a volatile ride since the start of 2021. So where are we at in the cycle today? Please welcome back to StansberryInvestor.com, Dominic Frisby. He is the best-selling author of Bitcoin, The Future of Money, and his latest, Daylight Robbery. Dominic, good to see you. Welcome back.
Thanks very much, Daniela. How's it going?
It's going well, but let's talk about Bitcoin, because how are things going for the much loved cryptocurrency, Dominic? Walk us through where we are at in this cycle today.
Well, cycles are a very useful tool because they often help you understand where you are in the grand scheme of things. For example, we're in this cycle where the West is about to end as the great dominant global superpower. But the speaking specifically about Bitcoin, as well as being a useful the danger with cycles is that you get too wedded to them, and you say, that cycles are sort of academic things that they're easy to look back at history and then look at a sequence of dates and say, oh, there's a cycle. And in real time, reality is rather different. But nevertheless, they're still a useful tool to help you understand where we are in the grand scheme of things. And if you look back at how Bitcoin's traded over the years, there's a pretty clear sort of cycle, and there are 4 stages to the cycle which I've identified. And the first stage of the cycle we'll call the quiet accumulation, and this is where nobody's talking about Bitcoin, and the only people who are buying it are people who are sort of the ardent zealots, people in the really sort of ardently keen mini Bitcoin bubble. And we'll call that the quiet accumulation. And then it goes into the second phase, which we'll call the frenzy and blow off top. And that's when the price suddenly starts moving up much more quickly. Everyone suddenly wants to buy in. There's a lot of media speculation. Everyone's going, is Bitcoin a bubble? Is it the real thing? And you get one of these blow off tops. And then you have one of those monster 50% plus corrections, which always seem to follow the blow off top. And then the fourth and final phase, I'm going to call the frustrating consolidation. And that's where Bitcoin range trades for quite a long period of time. It goes up a little bit, everyone gets excited, then it goes down a little bit. And ultimately, over a period of time, often a longer period of time than you would like, it goes nowhere. And that's the frustrating consolidation. Okay, so those are the 4 stages. If we take those 4 stages and look back at the last few years, ending in 2017 when Bitcoin went to $20,000, we had the frenzy and blow off top. Then we had the monster correction. Bitcoin went from $20,000 to whatever it was, $3,000, a 85% correction. It then spent, 2 years. If it was ranging around $5,000, $6,000. Went up at one point, it went all the way to 13,000, then it went all the way back to 3,000 again. That was 2 years of frustrating consolidation. And then, perhaps around last spring, around May, March, April, May, June, there was another one of those periods of quiet accumulation. When I say last spring, I'm talking about spring 2020. Quiet accumulation, everyone's going mad about COVID, everything else. Bitcoin quietly creeps up. And then perhaps in the autumn, in the fall of 2020, we're into another frenzy and blow off top stage. Suddenly, everyone wants a bit of Bitcoin and it goes to $64,000. Another monster correction from 64,000 to about 30,000, seems to have found a base around 30,000. And I would say now we're in another one of those frustrating consolidation phases. And the thing about frustrating consolidations is the golden rule is whatever is the most frustrating thing for it to do, it will do. And, it'll rise a bit, excited, then it'll come back down. And ultimately, it sort of needs to shake everyone off. And then we go into another quiet accumulation. So that's where I think we are. It's quite easy to pick holes in cycles. And, as I say, they're just useful academic vehicles. But that's how I see it.
Okay. Very well explained. A few questions for you, because the last time we spoke, you had correctly forecasted that Bitcoin would hit 50,000 at some point in 2021. We did that by February, and then it would have a correction, a 50% correction. We saw that happen by May. You say we're in a consolidation phase now, and that this is the speed at which this space moves. So what is it about the DNA of Bitcoin that makes it susceptible to these drastic corrections and moves?
Well, there's all sorts of factors at play. One is that it's a very emotional driven, it's driven probably more than any other asset. Crypto is driven by fear and greed. So you get these sell-offs that are too big and these frenzy and blow off tops that are too big in a way. And I think it's simply fear and greed that and speculation that makes it such a volatile and extreme market. But also it's a new technology, and I think it's really important to, when you're trying to understand the world, and in particular understand gold, we'll come to that in a moment, I'm sure. You need to understand that, digital technology, when, I don't know when it came along, 70s, 80s maybe, but in the 90s, ever since the 90s, the digital economy has just moved at a pace that has eclipsed the physical economy. And I think the reason for that comes down to one word: scalability. Let's just say I invent, I don't know, a fantastic new mug. It's the best mug in the world. I've still got to manufacture these mugs and distribute these mugs all around the world. But with digital technology, let's just say I design a brilliant app. I only need to upload it to the App Store once, and then it can be downloaded a billion times if I like. So there's just a scalability to digital. It's because it's so instantly replicable that enables it. If you think of, you're too young to remember this, but when I was a boy and let's just say I had a really good record and I wanted to record it to cassette. If I wanted to make 20 of those cassettes, I would have to record the record 20 times unless I had 20 cassette players lined up next to each other. Whereas with digital technology, I can just go splodge, copy and paste, and it's replicated 20 or 200 million times. And then if you just extrapolate that thought, you understand why it is that Amazon and Google and Facebook and all these companies have been able to grow at such extraordinary speed compared to the physical economy. And then because you get such a quick return, because they grow so quickly and investors get such a quick return, they're more likely to put money in, which just reinforces the cycle. So there's this growth, this speed of growth to digital assets that just does not exist in the physical economy. And I think that's partly explains the rapidity at which crypto has grown, but also the speculative manias. Like we've had, I don't know, 4 or 5 massive booms and busts in the 10 years or 12 years since Bitcoin's been invented.
That's really,
it does in a year what gold does in 10 years.
Basically, and I love how you say it makes gold look so docile. But you mentioned the word speculation, and the cyber hornets come out when that word is tossed around in regards to Bitcoin. But is it a speculative asset then, Dominic?
Well, yes, it is. If you look at gold, I mean, it's digital gold basically. And if you look at, why do we buy gold? We buy gold. We don't use gold for anything in the same way that we use copper or oil. We use gold, we decorate ourselves with it. I've got my little gold necklace, but we just use it to store wealth. And so, what wealth is not, it's the value of wealth is not so easily, it's much more psychologically driven than it is easy to measure, in the same way that you can measure, how much a company earns in a year and therefore what its share price should be. It's much less concrete. It's much more, could be this, it could be that. And so it's much more psychological. It's a very psychologically driven market. I'm talking about gold. And then that same thought extends into Bitcoin. And, there's some people who say Bitcoin is digital cash, and there's other people that say, hodl your Bitcoin. It's monetary energy or whatever. But all those reasons still means that traditional valuation metrics don't really apply, and therefore it's much more psychologically driven. And so, yes, I think the price is set to a certain extent by speculation.
And before we move on to talk about gold, Dominic, do you have any updated forecasts for Bitcoin? Not asking you to play soothsayer, but Maybe if you could fill
Yeah,
in.
I don't mind being soothsayer. I'm one of these guys. My calls are pretty good on the whole. I mean, I get a lot of stuff wrong, and I don't have a newsletter to sell, so I'm not in the game of making out that I forecast everything. But I think that cycle that I described is a useful way of thinking about things, and I think we're in a period of frustrating consolidation. It'll probably go up to, you know, maybe the mid to high 50s at some point, and probably go back to $30,000 at some point and retest that before we break to new highs. But the one good observation to make about frustrating consolidations as a cycle point is that if you think of no coiners, this is people who don't own Bitcoin and they've derided it ever since the start. And Bitcoin has one of its monster corrections, which seem to come around every 3 or 4 years. And then all the no coiners come out of the closet and they say, look, it's just corrected by 50 or 60 or 70%. What they don't tell you is that the price to which it's corrected is often 10 times higher than the low of the previous cycle. So the low of the previous cycle was $3,000. The low of this cycle has been $30,000. So it might have had a 55% correction, but it's still 10 times higher than it was 18 months ago. So they never tell you that. But in any case, frustration consolidations, they go on for longer than you think. They annoy, and you know, you can either attempt to trade them if you're really smart and go its range, and this is the sell point and this is the buy point, or you can just go whatever. I'm a long-term believer in Bitcoin. I've got my Bitcoins now, and I'll just hold and wait till the next boom comes along.
Yeah, have to agree with that, Dominic. Okay, let's speaking about frustration, let's talk gold now, because a lot of investors are frustrated with gold's performance. They wanted to see another $2,000 or higher summer. We're not there yet as we're speaking. And one of your recent pennings, you've said you can't recall another asset that's disappointed like gold against a backdrop of quantitative easing. You know, as we speak, we're down about 15% from its nominal high of over $2,000 last August. Talk to us about gold.
Well, listen, I'm a gold bug, Daniela, and I got into this space because of gold, and gold's a very political investment, and I'm a big believer in sound money, and I think the world is better if we use sound money and limited government and all the rest of it. But, you know, we have to be honest with ourselves, and it's 2021, and gold is still trading below where it was trading in 2011, which is what, 10 years ago. And, you know, with all the money printing that's gone on, it's pretty hard to find an asset outside of the commodity class that's done that. And then it's even down 15% on where it was last year. And if you think how much money's been printed last year, I don't even know. I used to follow it, but I've stopped. But, you know, gold and silver are down. And the touted reason to buy gold and silver was and is, you know, to hedge yourself against money printing. Well, I'm afraid from that point of view, the asset hasn't worked. And then you look at the gold miners, they've done even worse. And so you're forced into the argument, you know, the old Wall Street adage is put 10% of your wealth in gold and silver and hope it doesn't go up. Well, if you followed that adage and you were 10% in gold and silver and 90% in other stuff, you will have done very well because your other stuff will have risen. And in that point, gold is your role as insurance. That's why you buy gold as insurance. But, you know, to me, I'm a speculator. Insurance isn't sexy. Insurance is boring. I buy gold because I want gold to go to $2,500, $3,000, and I want stupid gold miners with stupid names mining in stupid places with ticker symbols on the venture exchange to be going up 10 times. You know, that's why we all buy gold. We all think gold's going to go to 2,500 or 3,000 or $10,000, whatever it is. Our gold miners are going to go up 100 times and we're all going to be rich. That's why we buy it. And the unfortunate reality is gold hasn't been delivering on that. Now, you know, you can say it's a manipulated market or whatever, you know, that might be the reason. And, you know, there's way more paper out there than there is actual gold. But, you know, I think a lot of it boils down to the fact that, you know, I described that dynamic that's at play in the digital economy, the scalability of digital and the speed of growth. We're in a digital world now, and gold is the single most analog asset there is. It is an analog asset in a digital world. And I think once you look at things like that, that explains gold's underperformance.
So is gold broken for you, Dominic? And have you given up on it, being a longtime gold bug?
No, I still own gold shares. I pick them a lot more wisely now than I used to. I still own a lot of gold. I wear gold around my neck, and gold's day will come again. I think gold is also in a frustrating consolidation phase, though in the case of gold, there's periods. There was a frustrating consolidation in gold that went on for 2 decades in the 80s and 90s. And this frustrating consolidations, I suppose it started in about 2013 or something. You know, it's gone on for a long time. You know, I had a glorious year last year invested in gold, and I'm sure you did as well. And its time will come again. And, you know, I study Chinese gold holdings at great length, and you measure the amount of gold that China has imported, and you measure the amount of gold. You know, it's the world's largest importer. It's also the world's largest producer. Doesn't export or sell any of its gold. It keeps it all. And China declares in its official gold holdings the minimum possible amount it could declare to look vaguely believable. But I've spent considerable time auditing China's gold holdings, and I calculate that they're at least 10 times higher than they say they are. And I think there's more official gold, I'm talking about, not private gold, official gold held by China than by the United States, which is supposed to be the world's largest gold holder.
I wouldn't be surprised by that.
And, you know, we all know that China's got designs on reserve currency status and all the rest of it. You know, gold's going to play a role in that. And the nature of empires is, you know, you sort of think with a country that's essentially an authoritarian country like China, why would it allow gold to be part of money? Because gold is the libertarian money. It's not the authoritarian money. But the nature of empires, when they rise, their money is sound. And when they fall, their money is debased. And so, but it really wouldn't surprise me at some point. I mean, the Chinese motto is "we must not shine too brightly," but you know, they've got an ambitious president. You know, they've got an ambitious number one. At some point, you know, he might want China's rise to reserve global currency status to happen on his watch. And you know, China could just declare its official gold holdings, and it would be tantamount to a declaration of war against the US dollar. So, you know, I guess that's one potential trigger for gold. But, you know, there are plenty. But at the moment, frustrating consolidation.
Okay. And I mean, I guess the point in terms of expectations for gold, others would argue, look, I'm not in gold to get rich, but really for wealth preservation, for store of value. And they would argue in that case, gold has done its job, but that's—
Well, it hasn't. It's 15% down on where it was last year.
And hard,
you can't argue with you can argue philosophically, but you can't argue with the ticker.
And to your point about, you know, gold will have its day again, and what that trigger might be. What about this push towards digital currencies that we're moving towards, and in terms of routes to freedom, if that is our new world, people are going to have to look for alternative assets. No, Dominic, like the cryptocurrencies or like gold.
Are you talking about central bank digital currencies?
Yes.
Yeah, I mean, China apparently wants to have its central bank digital currency ready in time for the Olympics next year, and the Winter Olympics. And I would have thought it's unlikely that gold will play a part in that. And in general terms, I would say it's unlikely that gold will play a role in central bank digital currencies. You know, the United States and Europe.
I mean that with a push towards central bank digital currencies, you know, and there's a lot of questioning of, you know, my privacy. The government will know everywhere where I'm placing my money. Do you think that will not be more of a push or incentive to buy assets such as the cryptocurrencies or gold or silver?
Well, I certainly think it's going to be like in England, we say the slip road, but in the States, you say the on-ramp. I certainly think central bank digital currencies are going to be the on-ramp into Bitcoin and crypto. I'm not so sure about gold. You know, we're in a digital age. All the value is digital. The value is no longer in factories and land. The value is in trademarks and copyright and intellectual property and and software and all these things. And as I say, gold is an analog asset. Its time will come again. It has to. It's the once and future money. But I've written extensively about CBDCs, and I worry about them. I think we're going in, when a government can track your every, programmable money. If you look at the abuse they put on fiat, what kind of abuse are they going to perpetrate on programmable money? Whether it's to control what you spend, to control who you spend it with, to control where you spend it. If you're a good citizen, you'll get a beneficial interest rate. And if you're a rubbish citizen that slags off the government on Twitter, you're going to get a much more punitive interest rate. All these kind of controls, money that with an expiry date on it, all these things. You'd like to think that gold would have a role, but I think the individual that's going to do best in the years ahead is the sovereign individual, the man who is a citizen of nowhere. And if things get a bit tight in the US, he can move to Mexico. And if things get bad in Mexico, well, he can go to Colombia or across to Asia. And these sovereign individuals, and Bitcoin is the money of the sovereign individual. I'm not sure gold, you can't take your gold with you. You can't get on a plane with your pockets full of gold. And my stepdad escaped South Africa in the 1970s, and he took 50 Krugerrands out with him, and that's how he got his money out of South Africa. I think those days of getting on a plane with 50 Krugerrands in your pocket, I don't think that's the modern world anymore. So unless gold can find a way of making itself mobile, I don't see it being that kind of escape. But it has to have a role to play. It's got too much history. Or maybe gold is just the horse. The horse was transport until we invented the car. And now, what do we use horses for?
I feel you are torn when you talk gold. And when you say gold will have its day, but based on what you're saying, it's hard to see that future.
Yeah, I mean, one scenario I've looked at extensively, Daniela, and I think there's a lot of possibility is if we get hyper Bitcoinization and, some kind of global, really serious inflation. I know they lie about inflation now, and really inflation's at 10 or 12%, even though they say it's 2 or 3. But I mean, if we get proper, hyper Bitcoinization, a rush out of fiat money, the one thing central banks do actually have is gold.
Bingo.
So maybe that's where gold suddenly finds its utility again, and that central banks start using it to back their currency in order to protect their nation's currencies.
And that is an argument that gold bugs will bring up. Why are the central banks not buying cryptocurrencies, or are they? We don't know about it, but why are they still choosing gold over crypto?
Because I'm not sure central banks are buying as much gold as they were 5 or 10 years ago. But I'm 51. I was born in 1969. And when I used to go to gold conferences back in the noughties and early part of the next decade, the 2010s, I would be the youngest person there. And when I go to cryptocurrencies, I would be the oldest person there.
Right.
So 1969, 70, I see that as the sort of crossover point. And I think one of the reasons central banks don't buy cryptocurrencies is that they're all run by people in their 60s and 70s. They don't get it, but they do understand gold at least.
I'm not sure about that, because I think the other argument would be that central bankers actually hate gold, yet they own gold.
Well, they might hate it, but at least they will vaguely understand it.
All right. Last point about gold.
I mean, ultimately, Daniela, the central banks tend to be run by people who are largely statist in their mentality, and statists tend not to like gold or Bitcoin.
Okay. Last point I want to bring up about gold, I swear, but I thought this really resonated with me when you wrote this. I'm just going to quote it. You say, every now and then gold experiences these monster sell-offs late on a Sunday night or early on a Monday morning, depending on where you are in the world. The market is barely open, thinly traded. It so can't absorb any major trading volume. Somebody comes along and dumps several $1 billion worth, and the price crashes. As a gold investor, you can't help thinking, why do I bother? I have to say, as someone who has been several years in this game, I'm not sure why I do. You mentioned the M word before, manipulation, and we've seen this pattern happen this summer already. Why does this keep happening to gold, Dominic?
Well, there's two reasons. Either somebody's had a margin call, which is the most obvious explanation. I mean, when that 100 tons of gold were dumped 2 or 3 weeks ago, the Japanese and the Singapore markets, they were on holiday. So even the Japanese and Singapore wasn't open. And it's like, let's say you're a banana salesman. You're not going to try and sell your bananas in the middle of the night when there's no one around. You're going to try and sell your bananas in the middle of the day when there's people around, and there's lots of people who, want a banana because it's breakfast time, or, they can sell it to their customers or whatever. You just don't sell something when there's no buyers around, unless your purpose is to get the price down, or you've had a margin call. So either a fund or someone was trying to drive the price down, or a government was trying to drive the price down. I mean, I remember looking at it. It was 12 o'clock at night in the UK. I was just going to bed, and I made the cardinal mistake of looking at my phone just before I went to bed. And it just so stank of manipulation. I've never been one for manipulation, but this one just stank of it. And I was like, I mean, it's just so blatant. They're not even hiding it now. But the more likely explanation is simply a leverage player got a margin call because gold had a heavy sell-off on the previous Friday. So who knows? But both explanations make sense.
All right, Dominic, I thoroughly enjoyed this conversation. I hope one day I could say the word banana as beautifully as you do.
Banana.
I love it. Could listen to it all day. Dominic, thank you so much. Come back soon to stansberryinvestor.com, okay?
With pleasure. Thanks, Daniela.
Awesome. I love this conversation. And thank you for watching. We'll have much more for you, so be sure to stay tuned. In the meantime, don't forget to sign up for Premier Access at danielacambone.com for access to videos and reports you can't get anywhere else. That's it for me. Thanks for watching. I'm Daniela Cambone.